Welcome back here, boys and girls. Welcome back. JJ here, School of Trade, Sideways Markets, with your nightly newsletter for the second day of April 2014. We made it through April Fool's Day, and of course this morning we saw pretty much exactly what we had bargained for in yesterday's newsletter. Now, before we get started here today, I do want to remind you, if you're not watching this video right now on our blog at sidewaysmarkets.com, make sure you head over to sidewaysmarkets.com to get all the charts and all of the supporting information that goes along with today's newsletter. Also, you'll see on the left-hand side, I would love to give you guys a free pass to come out and join us in our live trade room this afternoon. You can register for your free pass right there. And also, too, if you'd like to make sure that you always get an email from me when I send out my newsletter, go ahead and register for our nightly newsletter mailing list on the left-hand side of our blog. Also, don't forget, we have somebody standing by to help you guys with all the questions and all the answers you may have. We have somebody standing by with some live support here for you anytime you need. Alrighty, guys, let's rock and roll. First of all, reflections from today. Today's trades. We were expecting to see some buying opportunities today on crude oil, but crude traded sideways for most of the morning today, so we were buying lows and selling highs today on crude. Gold, of course, looking for selling opportunities on gold. If you recall from last night's newsletter, we talked about selling opportunities at the 94.8. This morning at 11:30 a.m. Eastern Time, that trade triggered short on gold. I'm going to take a look at that chart in just a few moments, so hold on tight here. Russell, we were looking for buying opportunities today on the Russell. The Russell just took off and didn't look back. No pullback to the 1180.4 area. That's where we were looking to be a buyer. No pullback yet, but we're going to give you a few more opportunities here this evening to find some more trading opportunities to the buy side on the E-mini Russell. So we're trading sideways on crude, moving lower on gold, and moving higher on the E-mini Russell. Let's quickly take a look here at what happened in the markets today. And then we'll go over what happened in the news today, and then we'll take a look at what happened this day in history, and then we'll begin to prep for tomorrow. First of all, markets were very quiet this morning, right? Very quiet this morning. In fact, Russell and gold were basically non-existent. The only reason why crude was moving around was most likely because of that big round number. So markets very quiet this morning. We had a feeling we were going to get that from crude today because of all that big range we saw yesterday. And it looks like gold might be waiting for tomorrow's ECB meeting. Basically, what we assume at this point is we get a big report tomorrow morning at 7:45 from the ECB, and then at 8:30 on Friday we have non-farm payrolls in the U.S. So we have to assume that after seeing a day like today, it wasn't all bad all morning. It was this afternoon we finally kind of thawed out a little bit and got these markets moving a little bit. But it's very easy to see, though, that traders, the big money traders out there, are clearly waiting on something right now, and that something is most likely going to be tomorrow's ECB meeting and, of course, Friday's non-farm payroll. We'll talk about that a little bit more as we go. Crude oil had a very quiet session today, very quiet. Really right now we're trading sideways just below $100 a barrel, a very small range today, just 97 ticks of range, a very narrow range, and of course a closing print just below that big round number at 99.41. Now, if you remember, we did over 250 ticks of range in yesterday's market on crude, so we knew today was likely to be a range-bound day, and that's exactly what we got. So what we expected today on crude was exactly what happened today on crude, so we were prepared for it. We also had a very quiet session in gold today. Very low volume, although we did have a decent range, 139 ticks of range, we still managed to close below the 1300, although we did rise today, because if you remember in last night's newsletter, we had pushed lower on gold, and if you remember, I'd given you guys a spot here to be a seller, and so we thought, well, we're going to wait for price to get up there and then start to come down. So what happened was, the reason why today is a positive number is because we did rise into that sell zone on gold. And we'll take a look at that on a chart in just a few moments. So gold was actually a relatively interesting scenario today. We got most of the action on gold happened in the London trading session. and we can pretty much assume that this was a short covering rally. There wasn't really any news. It actually pushed right at about 7:50 a.m. this morning. If you remember watching gold this morning, just before 8 o'clock. So it didn't have anything to do with the news. We assume it's all a bunch of short covering rally ahead of tomorrow's ECB report, right? So if you were short on gold like I was the past few days, you'd be taking your profit as well, knowing that tomorrow we might get a little bit of a shakeup in that gold market after the ECB's press conference at 8 a.m. So trading sideways in the U.S. session, that came after this big short covering rally, a bullish move higher in London. Closing print just below 1,300, and we'll take a look at the gold chart in just a few moments, guys. On the Russell, a very quiet session. I mean, the Russell was the quietest out of all of them. Stuck in the mud around last week's close, today's opening price at midnight. So it was a very quiet U.S. session. It did start to thaw out during the end of the day today. I took some profit out of it going higher at the end of the session this afternoon, but very sideways early in the session. Slight bullish tone in the afternoon. We've been bullish on the Russell all week, but today was a very, very narrow range. I mean, it looked like somebody pulled an April Fool's joke on the Russell traders today, because at first glance it was very, very slow. Only 83 ticks of range. I had to measure it myself. I didn't even believe it. 83 ticks of range. I can't even remember the last time it was that narrow, a full day on the Russell. So very narrow. Now remember, narrow range usually results in big wide ranges the following day. So we're going to talk about that and look at some charts in just a moment. Closing print today, 1189. You'll notice we're starting to tick back closer to that 1,200 big round number that we were looking at a few weeks ago. So don't be surprised if end of this week we find ourselves up there, 1,200 on the Russell. So crude, very quiet and sideways. Gold, even quieter, very bullish overnight, but sideways in the U.S. and the Russell. Very, very quiet this morning until almost the end of the session this afternoon, but only 83 ticks of range in the Russell. So we got some big clues here going into tomorrow. The news today, there was actually quite a bit of important news here today on the calendar. We began the session with ADP employment. And of course, ADP employment report, always very important ahead of non-farm payrolls. The first Friday of each month is non-farm payrolls. The Wednesday before that non-farm payroll report, we hear from ADP. This week, though, this month, we saw a jump in payrolls ahead of Friday's non-farm payroll report. So a little bit of a sign of things to come, a bit of a heads up on what we can expect out of the Friday non-farm payroll report. 10 o'clock this morning, this was the news that I was expecting to be the most important. It exceeded expectations, the factory orders showing signs of life after a bad weather, right, really killed this manufacturing sector in the U.S. early part of this year. So 10 a.m., we had factory orders. These came out higher than expectations. ADP employment came out higher than expectations. So bullish news across the board here so far. Now, crude oil. Now, we talked about this yesterday. And if you remember on yesterday's newsletter, I mentioned the API number last night, and it was a draw in inventories, which means inventories had gone lower. Now, usually when inventories are lower, it means prices should rise higher. But we discussed the fact that 6 weeks of draws had resulted in lower supply, and that this was going to likely be a non-factor today, and it definitely was. Inventories fell for the first time in 4 weeks, so that means inventories were rising higher for the last 4 weeks, and then of course finally came down. Now, as the inventories rise higher, usually prices will fall. As inventories fall, prices will rise on lack of supply. So we have to assume that's the fundamental behind it. But here's a good example today on crude, how we just simply knew that traders were going to discount this because of the bad weather. The bad weather caused everybody to stay indoors. They didn't drive their automobiles. They didn't open new businesses. They didn't hold open houses. They didn't go on vacation, right? Nobody really left their home for about 3 months on the East Coast and the Midwest. So for the most part, the demand for crude tumbled. Took them a few months, But now they've, of course, lowered the production, and now the demand and the supply are starting to balance out. So that's why we assumed this wouldn't be much of an issue today. Now, obviously, I don't care what I assume. We were standing there watching this morning at 10:30, didn't get much of a reaction to it, and it was no surprise for us. So news today was relatively bullish across the board with factory orders and employment. And again, this is all kind of speculation here now ahead of tomorrow's ECB report and Friday's non-farm payrolls. Those are going to be center stage here tomorrow and Friday. One of my favorite parts about this newsletter, this day in history. April 2nd, 1792. How about that for a little throwback Wednesday, right? That's a little bit of a blast in the past there. Congress passes the Coinage Act, which enables the U.S. Mint. Right? Pretty cool stuff to think about how our country was formed. And again, 1792, we are babies here in the U.S. But this is definitely, compared to Europe and other parts of the world, we are infants here in the U.S. But 1792, the Coinage Act, that enabled the U.S. government to create the U.S. Mint. And of course, they've been printing money ever since. April 2nd, 1956. For the first time, this is pretty cool, the New York Stock Exchange permits the opening bell to be rung by an outside guest. Now, this gentleman's name was Leonard Ross, and Leonard, he hit a half-court shot during the halftime. I'm just kidding with you. He won the opportunity on a game show. All right, a game show. Yeah, they actually had game shows back then, too, in the 50s. Yeah, now they're a little bit different, though, now, aren't they? I wonder if they had reality TV back in the 50s there. I wonder if Leonard was a reality TV show participant. But bottom line, though, Leonard, Mr. Ross, he won a game show contest about stock market trivia. And he was given the first chance to ring the NYSE opening bell. Now, if you want a cool article there, click on this hyperlink right there, and I'll point you guys over to some of the odder guests that have rung the opening bell, whether it be the rock band Kiss or New Kids on the Block, or whether it be Super Bowl champions, whatever the case may be. So lots of different people have gone through the New York Stock Exchange and rung the opening bell. Pretty interesting part of our history there at the New York Stock Exchange. And then here's something pretty interesting. April 2nd, 1982, just after I was born. I know, I'm a youngster, in my early 30s still. Futures contracts become available on the S&P 500. That's right, 1982, the first time that an investor could place a trade to buy either the futures contract or the underlying stock that made up the index. They could choose whichever they wanted. Very, very cool. And of course, this was traded not on the New York Stock Exchange, but on the Chicago Mercantile Exchange. This is one of the things that a lot of new traders always get confused about. The S&P 500, right, that actual stock exchange, this is the New York Stock Exchange. But the futures contracts, they're traded on the Merc, right, the Chicago Mercantile Exchange. If you ever get a chance to go visit the NYSE in New York or the Merc in Chicago, you have to do that, right? You have to do that. If you call yourself a trader, you got to go out and see some of the great history we have in these markets. Let's move forward here. Now that we know what happened today, and we know what happened today in history, let's now look at tomorrow for our news. First of all, we don't have to go to tomorrow yet. We've got news this evening starting out at 7:15 p.m. We've got manufacturing. You're going to see a lot of manufacturing here. We got manufacturing from Japan at 7:15. We have 8:30 a.m. retail sales. 8:30 p.m. Retail sales out of Australia. In China, we get 9:45 manufacturing. So those are the news reports for this evening. If you trade in the Asian session, if you trade in the London session, be aware you got some big news events. These are all Red Star news. So Japan, Australia, and Chinese manufacturing. All of them are Red Star news. So don't say I didn't warn you. Those markets will be moving overnight. We have 3:50 a.m., 4 a.m., and 4:30 a.m. bright and early. Then 7:45 a.m. we have the ECB rate announcement. So you can see here, we then move forward here now to the London session. We've got France manufacturing. We've got the EU manufacturing. We've got Great Britain's PMI. Right? Purchasing Managers Index. And then we got 7:45. This is the headline number for tomorrow, guys. That's the big news report that everyone's waiting on tomorrow morning. Now, why is it so big? It's big because just recently we've had a lot of rumors flying around the past few weeks. If you listen to the news wires like I do, you're going to hear a lot of chatter back and forth. People are basically speculating that the ECB is going to have to address the concerns about deflation. Now, of course, deflation means that you have the value of the euro going down, right? Your currency is worth less, and at the same time, the economy is not growing. So as goods and services lose value and the economy loses value, you can lose a lot of market worth. Basically, the market is worth less as this deflation starts to kick in. All right. In the United States, we've been talking about their inflation targets, right? They actually want inflation here in the United States. Inflation is good as long as it's not more than 2.5%, 3%. So the ECB right now, all eyes and ears are on the ECB because they're trying to figure out what they're going to do about these deflationary concerns. And so people think, will they cut rates? Will they increase rates? Will they roll out another program? What will they say? Or what won't they say? In fact, that will probably be the most important information tomorrow, will be what they do not say tomorrow morning at 7:45. Now, we're going to see a press conference begin just about 8:05 a.m. tomorrow morning. So the rate announcement comes out at 7:45, and then you're going to start hearing the press conference begin, and you'll see some reaction to that going into the 8 o'clock hour when we open up our trade room in the U.S. So again, tomorrow morning, 7:45 a.m., that's the big number. Now, this big announcement tomorrow morning, it may definitely keep things contained here overnight. So we got some really important news coming out here overnight and into tomorrow morning. But if we don't see much of a reaction to it, you're going to know right away what they're waiting for, and that is tomorrow morning's ECB announcement. We have 8:30 international trade tomorrow morning, 10 a.m. ISM non-manufacturing, and then of course we can't forget about one of our favorites there, the natty gas inventories at 10:30. So 3 important news reports tomorrow morning in the U.S. The big news, though, tomorrow morning will be jobless claims and international trade. Those are both Red Star news reports tomorrow morning at 8:30. And we're probably going to see a relatively decent beginning of the session tomorrow morning because we're going to get the reaction of that 7:45 rate announcement. We're going to get the reaction to the ECB press conference that comes afterwards. And we'll also, of course, have Red Star news at 8:30, international trade and jobless claims. So we're looking good for some volatility tomorrow morning. Then we have ISM non-manufacturing. That'll be an important number as well. And then I'm not much of a nat gas trader myself, and we don't trade it in the trade room because it is very inconsistent. It's very illiquid, and if you don't know what you're doing, natural gas can really get you in trouble. It's a lot like the FDAX, right? It is and it isn't, in the sense that it can be low volume and very volatile, and it can really take your head off if you're not prepared. It is similar to the FDAX, but 2 very different markets. Nat gas inventories tomorrow morning at 10:30 a.m. Got to be aware of that tomorrow if you're a natty gas trader. Then, of course, tomorrow afternoon, you got to be aware we got Friday's non-farm payroll report coming right around the corner. Every Friday, the first Friday of every month is when we get non-farm payrolls. The Thursday afternoon before non-farm payrolls, you're going to see things slow down. Now, why do I say that? Well, follow me down and let's read about this stuff here. Now, again, there's your news worksheet right there. You can use that as your time permits. And then I went into discussing a lot of what I've spoke about already. But I want to address the issue tomorrow of non-farm payrolls. So the end of the session tomorrow will likely be rather slow because we have the biggest news that we get Friday morning. Now, to understand why it's going to be so slow, I want you to put yourself in the shoes of an institutional-sized trader, right? Someone who trades hundreds of millions of dollars of other people's money. Now, imagine for a second that you're trading a clip of 10,000 contracts. That means that you cannot get in or get out of the market without moving the market. When you become an institutional-sized trader, it's now the opposite for a day trader. A day trader gets in whenever the heck we want. As an institutional-sized trader, you can only get into the market when the market allows you in. So you'll see institutional-sized traders split up their orders, right? You'll see a lot of spoofing out of these institutional-sized traders trying to make sure that they don't give away their intentions. Just recently, the CME exchange changed the rules on them and changed the rule on iceberg orders. If you haven't read this yet, guys, you have to read about this. I should have put this up on the blog. It's called iceberg orders. And iceberg orders, that's one word, right? Iceberg orders. And basically, iceberg orders refers to a technique that institutional-sized traders used to use where they would get special treatment and they would be able to break up their orders. So right now, they can't do that anymore, right? So they don't have that luxury of being able to slip in those big orders because guys like you and I are watching the time and sales window, we're watching the level 2, and we're going to be looking for clues. If I see 10,000 contracts to buy, I just might want to buy along with them, right? It tells us what their positions are. So check out the iceberg orders. You can see a good definition of that on Google. I should have put it up here before. But institutional-sized traders, they have a very difficult time trading the 12 to 16 hours before this non-farm payroll news comes out. Basically because they're not going to be able to get out of that position tomorrow morning if something goes wrong. So a lot of these institutional guys and gals, they're going to be flat going into that news report tomorrow. That's why the reaction to that news is so incredibly volatile on Friday morning. All right? So tomorrow afternoon, don't say I didn't warn you. It's going to be pretty quiet out there. I hope I'm wrong. Obviously, I hope I'm wrong. I hope we can trade all the way through till the closing bell tomorrow. But it usually does not happen the Thursday afternoon before non-farm payrolls. So if you've been meaning to go to, get that root canal done, if you've been meaning to go see the mother-in-law, tomorrow afternoon would be the day to go schedule those trips. All right? Let's keep moving. Trading opportunities for tomorrow. Now again, last night on Crude, we discussed looking for buying opportunities, but we never got them. Price just fell and just stayed stuck. And let's take a look at the VIP chart here. So first of all, the VIP chart, we can see here a very narrow range today, right? Less than 100 ticks of range on Crude. We typically get 120 ticks to 150 ticks of range on Crude. Very narrow. Opening print was at the lows, just barely outside those lows today. So very, very, very slight, but outside range. And you can see here, open at the lows, but we closed at the highs. We got volume in the middle, right? So what a backwards market. Open lower, close higher, volume neutral in the middle. Okay, whatever you want, Crude. As you can see here, apparently it wanted the chocolate, the vanilla, the strawberry, and everything in between. So we had kind of a all over the place. It was a very, very slow and sleepy day today on the black gold. So of course we know that the 2-day relationship is lower. The range is very narrow. If I get a bullish print above the 100.09, all right, 100.09, we're bullish tomorrow. 98.86 to be bearish tomorrow. This very narrow range usually results in what? In a very wide range the following day. Remember, we saw a very narrow range yesterday, and that's what told me that today was probably going to be a narrow range, and that's exactly what we got. Now, depending on where the opening bell is tomorrow morning, if the opening bell is above today's highs, I'm looking to buy, and I've got targets overhead. Get that prior week high at 102.24 for a nice runner. If we open up below, we're looking for selling opportunities below the prior week low. Again, very narrow range here today on Crude, so we're expecting a much wider range in tomorrow's session. Now, boy, I could have just used the same snapshot from yesterday on this chart. Here's our 64 anchor. Not a lot has changed. We're stuck in the mud right around 100. We never made it to 103. We haven't been down to 93 yet in a while, so here we are stuck in the mud. Now, when I see this chart, I think, oh boy, we're right in the middle of the wedge. All right, right in the middle of the wedge. Okay, that's red flag number 1. Red flag number 2, yeah, that sore thumb right there, $100 a barrel. That's number 2. And number 3, we've got absolutely no cloud, and we are stuck right there on top of all the key moving averages. So big round number, middle of the range, sitting on the key moving averages. All right, like I said, it's not a good looking chart at all. This is going to result in a little bit sloppier price action on the crude right now. So where would I rather have it? I would rather have it up top so I could sell the highs. I'd rather have it down bottom so I can buy the lows. Most professional traders, well, let me say this for a second. Most successful professional traders will choose to stay clear away from an environment like this, and they'll wait for price to either go lower so they can buy the lows or go higher so they can sell the highs. So stay patient. Now here was the chart from last night. Well, kind of last night. It looks the same. You can see we pretty much collapsed down over the past 72 hours, and then we just kind of sat here slopping around. Now this morning in the trade room, right, we bought the lows, we sold the highs, so we had a big old field day, right, trading crude in that sideways range. You know, if you're scalping crude, buying lows and selling highs, you're able to make some pretty good cash today. But as far as getting a short here, it just wasn't happening. I'm trying to get short on crude, but I want to get it to jump up here before we get short on crude. So I'm looking for shorts here around that 155 area. I'll even take it around 108, right, at that resistance moving average overhead. But I got to get us off of these lows so I can at least have price at a premium, right? You've heard me say this many times before. I want to buy at a discount. If I want to sell at a premium. So patience is a very, very important virtue right now on crude oil futures. Moving forward here now, that takes care of crude. Moving down here to that funny yellow metal they call gold. Gold, don't ask me where we're going next on gold, guys, because I have no idea where we are, right? I got no idea. I'm not trying to predict right now. Yesterday, volume at the lows, closing print at the lows. Short covering rally comes in here in London. I got to my desk this morning. Of course, I'm on the west coast of the U.S., so it's very early. I got to my desk this morning in the office at about 7:15, 7:30, just enough time to see that gold just whoop and right up here before 8 o'clock. And then what happened was it just kind of sat here all session on, right, in the U.S. So very narrow. I mean, this is one of the most narrow ranges we've seen on gold in a long time. So we opened higher. We had a closing print in the middle. We had volume in the middle. 2-day relationship is higher, a very narrow range, and an opening print above is bullish, an opening print below is bearish. The big thing here, though, is we know why gold is doing this to us right now. We know what's happening with gold. It's the ECB announcement tomorrow. Now, why would gold be so dramatically affected by this? Because the ECB announcement is just like our FOMC announcement. It has to do with monetary policy. Monetary policy is what's going to affect interest rates. It's going to affect inflation. It's going to affect the prices of gold, right? Because what's going to happen is tomorrow morning, if the ECB comes out and says more stimulus, we're going to print more euros, what's going to happen is gold traders are going to react to that bullishly. But if the ECB comes out tomorrow and says, nope, we're all fine and dandy, no new programs, no more stimulus, in fact, we look better than we thought we did, then what's going to happen is gold's going to push lower, right? Gold is that shelter market. When my paper currencies, when my fiat currency is worth less because they're either printing money or there's some other aspect that's driving the value down, like a pegged exchange rate, then you're going to see metals like gold take off to the upside. All right, so we know tomorrow is likely to be a very big day on gold. Why? We have two reasons. Fundamentals and technicals. What are the fundamentals for tomorrow on gold? The fundamentals are going to be the ECB announcement, right? That's the fundamentals. What's the technicals going to be? Technicals are going to be this narrow range. All right, this narrow range is the technical clue that tomorrow is likely to be a much wider range. All right, now be careful tomorrow, right at 7:45. Wait patiently to see how that ECB announcement comes out and then trade the reaction. As you can see here on gold, just a little bit of a blip here as we pushed higher today on gold. This was no doubt a short covering rally. I don't need to phone a friend on that. Easy to see we had a little short covering rally here this morning going in to tomorrow's ECB report and Friday's non-farm payrolls. You can see, though, we still have this support zone here, 87.7, 62.8. We still have it in play. Now, if we go higher tomorrow morning, we're gunning for that 1335.4. So if we go higher tomorrow morning, we know exactly where we're gunning for, 1335.4 tomorrow morning. All right, be aware of that level overhead. And then in recent news here, we actually just triggered this short. Now this is the fastest of my anchors. And if you remember yesterday evening, I mentioned that we were going to try to look for a selling opportunity and take this thing lower. This morning at 11:30, we saw a double top entry pattern on the entry chart on gold, and that gave us our green light to get short here. I have 3 profit targets below me. Profit targets here at 1281, 1272.7, and 1266.7 on the gold. All right, so now you get all the information you need here this morning to be capitalizing on the move tomorrow morning on gold. And then last but not least, the Russell we called a trade long yesterday evening on the newsletter. However, the price action has not pulled back enough yet for us to enter that trade long. I'm not giving up on the buy side on these equity markets right now, but I know that for right now, though, we're staying patient. We got to wait here for that pullback on the Russell. Now, the Russell moved a measly 83 or 86 ticks today. I mean, I thought it was a mistake. I had to double check a couple times and remeasure because it looked like I must have been missing something, but it was that narrow. So now we go in and we look at the Russell VIP chart and we see, what? Holy Christmas. That is a narrow range. It almost looks like a holiday, right? That's what it looks like when you have like a half day or a holiday session. It looks like a holiday. And I was amazed to see that we didn't get up to that prior week high. Remember what I said about last night? I said if we open up above the highs, which we technically did, but we collapsed back in, I thought for sure we'd get to that prior week high. Lickety split this morning, but it's just, again, very slow. I mean, this was the slowest of all the markets today, and this was the slowest of the slow I've seen in a while. This is probably the slowest day of the year so far on the Russell. So very, very slow. It's easy to tell traders are waiting on something. We continue to see this bullish movement here, though. It's very easy to see. We are still bullish here on the Russell. Now, I thought this was odd not getting that prior week high, but stick around, though. I'm going to show you another chart here, and you'll see exactly why we did stall out there at today's high of day. Open at the highs, it was bullish, so we opened this morning right at yesterday's highs. We were balanced, but we were very bullish. So I look at this chart, and the first thing I think is okay, yesterday evening we closed at the highs. This morning we opened right at the same highs. That tells me that we are completely in balance from yesterday, but we're still quite bullish, right? It makes sense to me, right? Hopefully it does to you too. Then closing print. The closing print here, also right at the highs. We did have the volume in the middle here, which tells us that it's not as aggressively bullish as we would think if the volume was at the highs. But I'll tell you right now, though, closing print yesterday at the highs, open today at the highs, closing print today at the highs. That doesn't say bearish, I'll tell you that much. It's definitely bullish to me. So we're definitely still staying bullish here on the Russell right now. The only real variable, the only real question mark here was the volume. The volume was right in the middle of that range today. What that means is it means that traders spent most of their time right in the middle of the session. And then towards the end of the session, they brought it up. Remember what I said earlier? I got a little bit of profit out of the market as it started to move higher today. I was hoping we'd get a big push going into the closing bell, but it just didn't happen. So very, very narrow range. All right, so opening bell tomorrow above the high. I'm bullish and buying. Opening bell tomorrow below the lows. I'm bearish and looking for selling opportunities. Now, let's figure out why didn't we push to that prior week high? Well, it's pretty simple. We got some serious resistance. Now, I've got resistance here on the 64 anchor, and I've also got resistance on the 16 anchor. So you'll notice here we draw our simple trend line. Okay, keep it simple, and now we're running right into that trend line. Now, if you remember how yesterday afternoon I said we're going to have to wait to get a pullback before we go higher? Yeah, we never got the pullback. A little bit of a pullback, but not much. So we're running right into that resistance. You can see here we got trend line resistance, and we've also got 1194 even up to that 1200 big round number. So lots of resistance here overhead. The easy money right now is going to be buying on a pullback and then getting it to go higher here. That's where the money's going to be made right now on this Russell if you want to be a buyer. And of course, ideally, I would love to see price pull all the way back and allow me to get in this trade long here at this 1159 to 1165 zone. So that's the big concern right now. We got some significant resistance here at these highs. So tough to tell what happens tomorrow, right? We'll wait and see what the opening bell looks like. But if we open up higher, though, chances are high they are going to push right into this area and go right to that 1200 big round number. Let's give you guys some targets. Here is probably the most important chart that we get. And if you remember, I was looking for a buy down here, right? I was looking for the Russell to pull back, get me in, and so I could use these targets overhead. But it never pulled back for me. And I'm the type of trader that I'm not going to chase after the bus, right? I'm not going to chase the bus. If I chase the bus, I'll wind up somewhere else exhausted and bewildered, right? I won't know where I am, and I'll miss the next bus. So don't chase after the bus. If the bus comes early and you miss it, you missed it. Just wait, right? These trades we take every day, they're like buses. If you miss one, hang around for a bit, there'll be another one right around the corner, right? We don't chase the bus, and we don't get off the bus too early. So I've been trying to buy this Russell, and now we start seeing, okay, now I understand. We've got resistance here overhead, 91.2, 97.5. So again, I want to be a buyer right now, but I do not want to buy at the highs. I do not want to buy at a premium, right? Would you buy a car at a premium price? Well, probably not. I'd rather buy that vehicle at a discounted price. So my plan right now is to buy if I can get the price to pull back here. I've got 1186.3 and I've got 1183.9. There are two levels there now that I'm going to use this afternoon and in tomorrow morning for buying opportunities. Whatever you do, do not buy tomorrow directly into 91.2 or 97.5, all right? Not the place to be buying. If we do go higher and we don't pull back, that's okay. I will give all of our students at School of Trade some forward guidance once we get into the trade room tomorrow morning. So if we don't pull back and we go higher instead, I'll be there with you guys tomorrow to give you updated levels tomorrow morning right when I get to my desk. All right, so that's one of the benefits of being with me tomorrow morning in our trade room, is that you don't have to wait from day to day to get the updated charts. I'm going to come in tomorrow morning and I'm going to update them right there for you guys in my live trade room. All right, one of the perks of being an advanced member. So you guys see I got entry points here, 83.9, 86.3. I've got targets overhead at 91.2, 97.5. My big targets, though, are up top here, 98.2 and then 1202.4. That's going to be your runner target for tomorrow morning's session. So bullish on the Russell, bearish on the gold, and crude oil, well, we'll wait and see what tomorrow brings on crude. That wraps up our nightly newsletter here, guys. I want to thank you so much for being a part of this call this evening. Every evening, 8 p.m. Eastern Time, we send out our nightly newsletter. And don't forget, guys, when you're on the blog here at Sideways Markets, make sure you join our newsletter. That way you get an instant update every time we send out something new. And I would love to invite you to come out and join our live trade room this afternoon as a guest. I'll send you a free pass. So shoot me over your email and your name, and I'll send you a free pass to attend our live trade room. Don't forget, you can join our free trial membership over at SchoolOfTrade.com. SchoolOfTrade.com. Check out our free trial membership, and you can also learn all about our 3 levels of lifetime memberships. Guys and gals, I want to thank you so much for being a part of our newsletter today. Thanks for your great feedback. Thanks for all the great questions. If you have any questions or feedback for me, I'm JJ at School of Trade, or you can simply post a comment below the video on our blog. Don't forget to learn it so you can earn it. And I'll see you guys here, same time, same place tomorrow. Adios, amigos. Bye-bye for now.